expected earnings from Countrywide
Does that
today.
surprise anybody? The company at the center of the mortgage mess, ground zero of the foreclosure world, reports losses of 79 cents per share. That's actually more than double the estimate. In spite of the losses, Bank of America's CEO Ken Lewis says everything's still a go for his company to buy out Countrywide. Is that smart or stupid?
Our Fox panel is now back to talk about it. Pat, it certainly is contrary to logic.
Yeah. You know what is really amazing to me? We keep saying, they were worse than the estimates. We should start questioning these estimates. Have we noticed that financial company after financial company after financial company has missed the estimates by huge amounts? There are very few good analysts. We got to really look at how these estimates are being done.
Victoria? Countrywide's got the so-called real estate in the mortgage market. They were the nation's largest lender.
Right.
So is Bank of America actually going to look pretty smart having picked it up on the cheap?
Well, yeah, they could pick it up on the cheap. The interesting thing to point out is that the stock market investors in Countrywide are certainly skeptical that this deal is going to go through. There's about a 20% spread between Countrywide's current stock price and the value of the deal that Bank of America put out a month ago. So that suggests that the deal didn't price in all this negativity that we now see has come about because the housing prices is worse than Countrywide thought it would be.
And Victoria, I have to apologize. I said I was going to go to you first. I love Pat, but I went back to my word. You know I would have done that anyway. All right, Charles, what about this? Is Countrywide still a bargain?
Yeah, I think it is. Ken Lewis, he could have waited, but he could also have waited for the company to slip into bankruptcy, and it probably would have become a much more complex issue. Some folks say perhaps this has a lot to do with ego, because let's not forget, and when they put the $2 billion in at $18, a lot of people said this guy's a genius, and he went from being a genius to a goat pretty quickly. But I don't think he's doing the deal just to save his hide. I really do believe there's a business fit here. Yes, he probably could have gotten it a little bit cheaper. It could have been a more complicated deal. There could have been other buyers if this stock had slipped into bankruptcy. So I think all in all, a few years from now, he'll look brilliant.
Peter, will he look brilliant, or will he look like a guy who really hurt Bank of America, picking up on the so-called on the cheap? But what is he picking up? A company that was really at the center of the major problems.
Yeah, I think it's the latter, Liz. I think there's a lot more liabilities in Countrywide than assets. I think the company has a negative value, so he's overpaying. I think if I was a Countrywide shareholder, I would be rooting for this to go through. If I was a Bank of America shareholder, I would be rooting against it. In fact, I would be particularly annoyed at the fact that Countrywide just announced a 15-cent dividend to their current shareholders. I mean, that money should go to Bank of America. How can they let this company pay out dividends on huge losses?
Well, that's a great point. But, Wayne, clearly Bank of America has had a chance to pore over those books. Now, I know a lot of people have been poring over books and not finding things they should have found in the past year. But has the learning curve kicked in? Are those analysts prepared to spot those little problems like subprime exposure?
I don't think analysts I don't have a high regard for analysts in the first place. So whether or not they're going to spot it or not is beyond me. But Lewis is a very cogent guy, and he knows what he's doing. The price may get it. He's going to buy it. That's a done deal. Whether it's done at this price or the price gets adjusted, that's another question. But he's going to buy it because it is a great fit, and at some point in the future it will pay off. But he may be paying up for it in the meantime.
Paying up for it in the meantime, Pat?
Yeah, I think so. And I would like to say that ultimately, we're still going to borrow money. And this is a franchise. And this may be a really great fit in the long haul because of the franchise. People are going right now, they're refinancing. If you have good credit, you can go out there today and you can refinance yourself and get interest rates on a 30-year mortgage in the 5% right now.
Well, that's manna from heaven at this point.
It absolutely is. It helps the consumer.
But sticking with Countrywide, Bank of America is going to supposedly, last I heard, keep the Countrywide name.
Right, and they should.
That means that they don't feel that it's a terminal. It's not a horrible name.
I don't think it is. I think Countrywide's done a lot of things right in here. They're renegotiating their mortgages.
It's not the name, it's the liability.
Last year they did 83,000 mortgages they renegotiated. They're actually proactive. They're calling people who have subprime loans and saying, are you in trouble? Let's talk. They're trying to make this work. Some of these other bankers are kind of brain dead when it comes to this.
But Victoria, there are two things that Peter mentioned, actually. I've got to give him credit. The liability of the company itself and the fact they're giving out a dividend. Does that make sense in this environment?
Yeah, I don't understand that dividend move at all. Given what dire straits their market is in, what dire straits their balance sheet and income statements are in, I don't know why they would give out a dividend right now, except to appease shareholders, to keep them in for the short term until B of A does the deal. It's odd.
Why do they have to keep them in? They're just enriching themselves. Maybe they have some shares and they're paying themselves something before Bank of America.
Well, they sold a lot of
buys
shares.
the company.
They got out.
Yeah, they did sell a lot of shares, and of course, Mazzullo's the poster boy for this whole thing. But I think it's wise to keep the name as well. They've been around since 1969. A lot of people have bought their homes through these guys for the last 3-4 decades.
That's
and this
the problem.
too will pass.
Well,
A lot of those
not
people are going to be suing, and a lot of those loans are problem loans.
Yeah, but you know what? Well, what do you think, David? I mean, and feel free, Wayne, to jump in here. But if there are lawsuits, at some point, isn't a good defense attorney going to say, yeah, but you signed on the dotted line, and here it says granted fine print, but here it says exactly what you were getting?
Well, there are going to be lawsuits. There are always going to be lawsuits. You know that. But, you just have to deal with that. That's going to come out of every deal.
Right.
Sooner or later, somebody is going to be disappointed. Somebody is going to sue. Somebody's saying somebody's getting too much out of it.
But you don't know. The lawsuits are going to come.
It also depends what the folks inside Washington decide.
But the lawsuits are going to come.
Who's in the White House, and maybe if the Democrats are in, and you get a different type of attorney general. But $1.5 trillion in serviceable loans, that looks attractive to a lot of
No,
banks.
the lawsuits are going to come from all sides, though. They're going to come from the people who borrowed the money. They're going to come from the people who bought the loans.
You may well be right, Peter.